Information presented herein will not be taxing, it will be accounting. This is the IssuesWatch podcast. Hello, and welcome to the IssuesWatch podcast. I'm Brad Muniz, your host of the bi-weekly accounting and auditing episodes. I'm the partner in charge of accounting and auditing with Sobel & Company. These A&A episodes now qualify for nano credit. If you're interested in earning CPE credit for this and other episodes, hit the pause button and head over to njcpa.org/nano to find out how. As a quick disclaimer, these views and statements expressed herein are my own and not necessarily those of NJCPA or Sobel & Company. So we've got some interesting updates today that I'd like to tell you about. So the FASB had a meeting. I think I mentioned it last time. If you didn't go back and see that episode, you can try and get nano credit for that. But they had a meeting and discuss the lease postponement. I was all excited that they're going to postpone the leases. I prayed. I thought it was going to be my early holiday gift, but no, I didn't get that or a pony. They said no more delays. Start doing it. Enough of this. So if you haven't started working on the leases, I strongly recommend you start looking into it. I don't care if you're in public, private, wherever you are, start looking at this lease pronouncement. It is going to be a big change. The CPEA, Center for Plain English Accounting, is in a AICPA section. If you're not a member of it, I strongly recommend you look into it. It's a really, really good resource, but they put out a 19-page report on companies' preparedness. We just joined it and found it very valuable. It's not a commercial for them, but I'm just trying to get you as much information about all accounting and some auditing in there as possible. FASB has also talked about identifiable intangible assets and subsequent accounting for goodwill. I don't know how long we're going to go on with this, but they're talking about reviewing the accounting for it, the amortizable life, etc. But they keep talking about it. On some big items, though, two new pronouncements came out. You haven't heard me say that in a while, but just about new pronouncements, but two new pronouncements came out. The first one, take a guess, take a wild guess. Did you guess it? Leases. Can't stop. Discount rate for lessees that are not public business entities. So what are they saying here? They're going to allow non-public business entities to make an election to use the risk-free rate for the discounting for the lease liability. So you get to use the risk-free rate. You can make that election. But if you make that election, you have to use it for all leases. But then they also say in the next paragraph, if the lease does have an implicit rate, you have to use that. Okay, but if they're absent any information and you're going to elect to use a risk-free rate and there's no implicit rate, you have to use that for all leases. You can't say for this lease I'm going to use a risk-free rate and this lease I'm going to use the incremental borrowing rate, risk-free rate across. Okay, and it's for the period that relates similar to the lease that you're looking at. Then, great timing here. The the first one's effective as it relates to the lease pronouncement, which you know for calendar years starts January 1, 2022. Okay, for fiscal years beginning after December 15, 2021. Then 2021-10 government assistance disclosures. So remember when PPP came out, they said that you have to account for it under the debt forgiveness that the FASB follows, and they said, but if you don't want to do that, you can follow for IAS 20 and you could account for your PPP forgiveness. It's assuming that you met substantially all responsibilities. If you want to find out more about that, reach out to me. But they now came out with and said, okay, if you got government assistance, there's certain disclosures that you have to do. Information about the nature of the transaction, the line items on the balance sheet or the income statement where this forgiveness or the debt relates to, and the significant terms and conditions of the transaction, including commitments and contingencies. Now, both of these pronouncements that came out are not very long, only around 25, 27 pages. I recommend you look into them and become familiar with them. Okay. They have been talking again about current and expected credit losses. CECL, not the turtle, a pronouncement that talks about potential credit losses. Now, when this came out, everybody said, okay, this doesn't apply to us. This applies to banks, people that are doing lending. No, this applies to all companies pretty much that give some sort of credit. If you have accounts receivable, you have to consider this. I was at a session at a group of firms that we get together annually, and there was a session on CECL. Wow, this thing is going to be tough. I'm hoping that the private company counsel or somebody steps in and says, listen, for these private companies that just have receivables, you don't have to do this. Because the way you have to bucketize your receivables to determine what is your credit losses are going to be, it's just going to be very time consuming. And I'm talking to those that are in the industry because these are your financials. You're supposed to be doing this and at a minimum understanding and taking responsibility for it. When I was at those meetings last week, one of the things I thought that was very interesting, other than the New York, New Jersey area, or we'll call it Connecticut, the tri-state area, a lot of other firms in other states use FRF for SMEs, Financial Reporting Framework for Small, Medium-Sized Entities. And they got it through. The banks accept it. So I don't know if we could ever get it done here, but it seems in the New York, New Jersey area, the banks immediately say, we want GAAP. We want GAAP. We want GAAP. We want GAAP. If we could get away from that, then we can start avoiding some of these pronouncements that you've been hearing me talk about either here or on webinars or at chapters or at other meetings about all these onerous pronouncements that come out. So maybe we could start pushing for that. But again, these comments are my own and not those of the NJCPA or Sobel & Company. Okay, AICPA update. Not a lot of big updates this time. I'm going actually stretching back to a couple presentations ago. And when I talked about the Systems for Quality Control Standards, Quality Management Standards, what a slip, is SQMS, System Quality Management Standards. They put them out, proposed them, put them out. The AICPA actually has a nice handout on it that talks about what the changes are going to be. I recommend you really start looking into this, especially if you're at the firm. It really talks about assessing the risks within the firm, not just within the firm. I attended a session last week presented by somebody from the AICPA, and what she hit us with, I was just sitting there saying we have to do all of this, including assessing your CPE. The quality of the CPE. Is there going to be proper learning to help you satisfy your responsibilities of what you're doing? So these, of course, are grade A, okay, and then you go down, 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 down. But honestly, you're going to have to assess everything. And I actually raised my hand and asked the question, including CPE, and she thought about it for a second and said, yeah, including CPE. And I'm not just saying that. What tools do you use? Now, Excel is pretty standard, but do you use other resources and research material to help you? And there's a lot of information, so I strongly recommend if you haven't looked into the document, look into it, because when you have to start documenting all this, it's going to be onerous. A couple other quick things. Peak proposed AICPA ethics code revision to address certain SEC changes. Won't go deep into that as it relates to the SEC. SEC Chair Gensler requests more transparency for private equity and hedge fund fees. Those are the fees that management, the manager fees that are charged. He wants more transparency. As it relates to PCOB, and again, I'm just giving you some news updates here, but it is good for you to know. PCOB is a new chairman and board members. Me reporting that makes me feel good because I know that there's nothing big that we're hitting on that one. So, and the last one I just thought was really interesting. I wanted to bring to your attention. Again, I mentioned something about this in the past, but sustainability disclosures. And I know you're sitting there saying, come on, Brad, stop with this. And some people from some sides feel like, I don't want to hear it, type of thing. But we have to start listening about, thinking about this, because the International Sustainability Standards Board, okay, which is part of the IFRS Foundation, is preparing standards expected to be published in the second half of next year. Now, I know everybody's sitting there saying that's international. It doesn't matter. We have to think globally. How is this going to start affecting us, okay? And some people work for companies that are international too, so keep that in mind. Those are the big items I wanted to bring to your attention. Going to the closing, if you're watching this timely, tomorrow, December 1st, from noon to 1 p.m., I will be moderating a panel presentation with my colleague Liz Harper, as well as Michael Gilchrist from Rotenberg Merrill, on what to expect from the DOL's 2021 review of employee benefit plan audits. And on December 2nd, the Society is hosting its annual nonprofit conference. Go to njcpa.org/events for more information on these and other events, especially get your Yellow Book credits. And as always, I recommend that you join the NJCPA Accounting and Auditing Standards Interest Group by going to njcpa.org/groups. Thank you for joining us. We'll be back with a new A&A episode in 2 weeks. You can access this and other Issues Watch podcasts, especially Ralph's and Don's, at njcpa.org/podcast and Jeff's.